So, what one amenity that consistently drives booking? The most hosts maybe overlook, they just think, oh, maybe it's kind of extra cost for them.
Yeah. So the answer is it depends. And I'll answer it this way, right? Do you need a hot tub in the Keys of Florida, or do you need a hot tub in Michigan, right?
Hmm.
You want one in Michigan way more than you want one in the hot Keys,
Exactly.
right? So it always becomes market dependent on the amenities. And I think how do I put this? Like, it's market dependent, but then every market has like different things that matter. And if
Mhm.
you can look into that market and try to see what other people have, then you just reverse that and do it for yourself. And so I've been trying to get the word out.
I'm a real estate investor and a fund manager. And on this show, we go beyond the basics to uncover real strategies, real stories, and real opportunities to help you build wealth through real estate investing. And today I have a very special guest, John Binaki, with me. John is the founder of STR Research and a leading expert in short-term rental investing, having guided over 70 million in investments into high performing Airbnbs nationwide. With a flawless track record across 150 plus properties, John is known for turning complex data into cash flow. And when he's not analyzing numbers, he's enjoying time with his newborn daughter. Congratulations, John.
Thank you for having me. I appreciate it.
And today, our topic of discussion is Airbnb Gold use data to build a cash flowing STR empire. Airbnb has quickly become one of the most effective ways to build real recurring income, allowing every investor or everyday investor to generate cash flow without the demands of traditional real estate. By turning properties into short term rentals, investors are creating scalable, semi passive income streams that can outperform long term leases and even hedge against economic downturns. So, in this episode, John will break it down for us exactly how he's using his numbers, not just the guesswork, because he does a lot of data research. And also, he's going to help us find cash flowing short-term rental strategies, like how to do that. So we'll explore how to forecast revenue, pick winning markets, avoid any costly mistakes, and build a buy box that keeps our portfolio strong and even in the downturns market. So let's start with the introduction, John. Take us back in your life and tell us, how did you first get into the short-term rental space and what drew you to Airbnb as an investment strategy?
Okay, we gotta go back to 2017. At that time, I was a financial advisor, and I was in a situation where I managed $10 million. My partner was managing $90 million. So we were in a good position as a business. And, I had my name on the door. I had my own assistant. I was 24 years old. I was kind of on a really, really good path to just breeze through life, I guess you could say, honestly. And I was unbelievably bored and knew I didn't love what I was doing. And so I was actively trying to figure out what else I should do with my life, right? Because I knew that wasn't it. And at the time, I had an apartment with an extra bedroom, and I decided to test out this Airbnb thing. And so I put my bedroom on Airbnb, and then that bedroom ended up paying all of my rent, and I thought that was super intriguing. And I've been a guy who loves traveling. I love exploring new places. I love the just sort of vacation industry, I guess you could say. And I realized that like this Airbnb thing was kind of in that realm, right? And so from there, I started researching to figure out that other people were building businesses around this. And then I went further to figure out how could I build a business around this. And then I was able to raise some money, sell off the business that I had, and go open up a bunch of Airbnbs. Ultimately ended up opening about 15 plus across Chicago, Scottsdale, Michigan. And then COVID came around and kind of wiped out that entire business because the way it was structured at the time was a really poor business model, which I learned through failure. But then luckily I was able to take the one skill that I did best, which was analyzing the data to pick out which property to turn into an Airbnb and turn that into a service of its own. And that's how we got to where I'm at now today. Does that answer that question for you?
Yeah, you did. I think that was
Okay.
a good starting point. So before you started with this STR, short-term rental research and all the data, because you became a data geek, you know, post-COVID, I would say, pre-COVID was a different model. So we're going to
Mhm.
talk about that as well. So what was your first Airbnb experience that you said you started from one room that you rented
Mhm.
and it was paying off your rent because you were renting, I assume, the whole unit and then kind of subleasing one of the rooms there. And it was
Yeah.
taking care of the rent. I think that's what I heard your experiences. From there, you started expanding. So that opportunity taught you something. There is something that you can take it at a bigger level, right? But at the same time, what was that business model that you felt like, okay, it kind of failed during the COVID? So let me
Mhm.
revamp everything.
Yeah, the model that I was doing at that time was called rental arbitrage, where you would rent out somebody's building, right, apartment, and then you would re-rent it onto Airbnb. And it's a very common thing nowadays. Back then it was a little bit more new. And I was a guy who didn't have enough money to go out and buy all these different homes that I would want to buy. And I didn't at the time know about property management and how property management would be a significantly better model. And so I
Mhm.
went out and opened up a bunch of these rental arbitrage properties, and they have such high risk. And if anything goes wrong, you're closing down your doors almost instantly. And the model completely fell apart when we hit COVID. And a lot of these like larger companies, there were some companies that had like 500 to 1,000 of these units, and they all just kind of collapsed overnight. Um, Luckily, like I said, I picked up this skill of analyzing Airbnb data, which I then turned into STR Research, which is my new company now. But that model, rental arbitrage, it just has so many flaws to it that at scale, it just doesn't seem to work.
So I know a lot of people still doing that rental arbitrage because they think it's a quick way to make money if they do not have like the enough capital to get started on their own, like you said, buying. That's a different model. Now we'll get there in a bit. But what are the risks? Can you tell us that? Or what are the red flags? Or what are the learnings from you from
Mhm.
that experience that you created something even like, supercharged up system now?
So the flaws with the rental arbitrage model, right? Is really what I want to cover here. So I try and talk people out of rental arbitrage as much as I can nowadays, right? The reason rental arbitrage gets promoted so much online is because with marketing, you want to have like the lowest barrier of entry as your sort of talking point, which makes it easier to get in front of more people. And so that's why this whole rental arbitrage thing has been pushed like crazy by so many people. But in reality, if you actually break down the business model, it's not that interesting. Okay, and I'll explain why with the two different options here. Rental arbitrage is the one where you go out and rent somebody's property and you take on that risk. The alternative option is you manage somebody else's Airbnb. Okay, and I'm going to kind of compare these side by side because when they're side by side, it's a no-brainer. With rental arbitrage, you take on, once again, the risk. So if you're paying $3,000 a month in rent, that is on you. You also have to cover the utilities and you have to also furnish it, right? And when I was furnishing these properties, it was costing me about $20,000 to furnish the entire unit. So I had to have $20,000 upfront, and then I was on the hook for the rent and the utilities and any damage to that property on a monthly basis. Okay. So a lot of risk is what I'm trying to say. And ideally, you're able to find a property where the amount of revenue that you make from the property covers all those expenses and there's still some profit left over. Luckily, I understood the data and I was good at doing that, right? So like I could make that happen. But then I ended up figuring out one of my landlords goes, "I have another unit." And she goes, "I'll furnish it if you just manage it for a percentage." And it was this light bulb moment that I went, "Okay, so hold on. I have to pay $0 upfront, meaning I don't have to get the furniture in there, right? So I don't have to pay $20,000 for furniture. I also don't have to pay the first month or the last month's rent. And the landlord was going to pay for the rent and the utilities. And so I had zero risk, and she was going to let me manage, and I would receive 20% of the revenue, right? So even in the slow months, if she was losing money, I was still making money. So when you put these two models side by side, where with the rental arbitrage, you got $20,000 up front, you're taking all the risk, and hopefully the property makes enough money that you turn a profit. And then the other model is $0 up front and no risk, like literally no risk in the deal. And then which one would you rather get to scale your business, right? At that point, it just becomes an absolute no-brainer that the property management model is a better model.
Oh, interesting. Yeah, that's a good one because but what if it's not, she didn't get to rent it, then what? You don't get paid or you still get paid?
Yeah, I mean, if she was making no money, if she made $0, then I would make $0 as well. But her home just didn't make $0. It made, I think that one made like 80,000.
Wow.
Yeah.
That's good. Yeah. I mean, it's a huge cost, for somebody, even if you're renting it, it's like fixed cost, your rental, because you're paying somebody, you're renting from somebody, and then furnishing again a big cost. But I think you can do that, you can use that, right? You can depreciate that, all that furnishing and everything, you can get tax write-off on that some way, one way or the other, right?
I'm not 100% sure. I don't know personally. I'm a Canadian, and these places were in the States, and so I wouldn't be able to get those tax advantages. I don't believe. But even you bring up another really good point of depreciation, right? So when you buy all this furniture brand new, as soon as you buy it, it's worth like a fraction of what you paid, right? It's kind of
Mhm.
like driving a new car off the lot. It's automatically worth a lot less. And so I would spend $20,000 furnish the place, and then it was worth all that furniture was worth maybe $5,000 if I could get someone to buy it all, maybe, right? And when it was at the peak of COVID, I had a whole unit that was filled with furniture, and I just had to get it out of there, and I paid a guy 1,200. A guy paid me $1,200. And honestly, I at that point I would have given it to him for free because it just needed to be out of there. And anyways, so there's a lot of flaws with that model. Let me just state that.
So let's come back to your present state now. So you have kind of revamp your system, you have brand new business model. So let's talk about that. What
Yeah,
is your business model now that you feel so strongly about it that, okay, is easily scalable because you were talking to me earlier before the recording that you're looking to syndicate maybe someday as well.
yeah, yeah. We were talking about syndicating. So I'll jump to that in a minute. But after COVID kind of wiped out my business, not kind of, it wiped out my business, right? Naturally, by doing that for, I think it was like 3 to 4 years that I was building up that business, I'm going to pick up a couple of skills, right? I'm going to like learn some things as I go through. Well, I realize I'm not great at sales, I'm not great at operations, but there was one thing that I am good at, and that was being able to look at Airbnb data, make sense of it, and then know which homes would be the best ones to pick up to allow you to cash flow, right? And whether you're buying or if you're renting or if you're doing property management, I could analyze the data well enough to have a pretty good idea if it was going to make money or not and how much money. And I kind of proved myself during that process of the homes that I was getting. And so after everything kind of goes away, I have people who are starting to reach out to me and they're like, can you help me with the data? Because I made this little tiny 2 hour training and I put it onto YouTube and it started getting a bunch of views. And I would help one person and they would, they would then refer a friend to go help, ask for me for help as well. And it was this tiny little like consulting business almost in a way, right? Where I was able to just one-off people here and there. And I got to a point where I realized like I actually really enjoy being able to be an expert in Airbnb data and like be able to guide and help other people. But I didn't feel 1000% confident with my process. And so I wanted to actually take it a step further. So what I did was I applied myself to a position, like a job, that would allow me to hone in on my skill. And that place that I ended up working at was called TechVestor. At the time when I first started, they had about 5 properties and they were very, very small, right? By today, they are now the largest short-term rental investment fund in America. They have over 150 properties, and I've helped them identify all of them. By the way, the bio that you read at the beginning, slightly outdated. We're at 210 plus properties, over $100 million allocated, and my daughter's 13 months. So she's not a newborn, but we're scaling, right? So
Did it bio.
Yeah, I kind of sent. I don't know how. I thought I did, but my mistake. So so where I was going with that is that I really wanted to prove to myself that the process I had created for my little arbitrage business would also work with buying properties, and it did. Right? We have a perfect track record. So every single last property that I've helped people purchase is profitable, and so then therefore we are 100% track record. And so then we get to a point. I get to a point where I can find more properties than the investment fund can raise money to buy, right? So they can't raise money fast enough to be able to buy all the properties I'm able to identify. And so I explained this to them and I'm like, listen, we need to break this exclusivity contract that I have with you so that I can then go open up my doors to everybody, retail investors rather than just institutional and be able to help more people and doing the one thing that I do really well. And we did exactly that. I still work with them, but I broke my exclusivity contract and now the doors are open and I can work with everybody and anybody to help them identify properties that would make really strong cash flowing Airbnbs across America. And within 15 months, we've helped over 100 people at that in doing that. So that's where we're at today.
That's great. That's a great story. But I wanted to dig a little bit deeper. So you
Okay.
became this Airbnb data guy. That's what I'm gonna say at this point. And
Yeah.
then started working with TechVestor, and then you added a lot of value to their portal, and you have now doing things outside of that arena as well because you don't have the exclusivity contract with them anymore, right?
Yeah. Yeah.
So what I wanted to ask you is, can you break down what it really means, when you say, I am the data person? So I'm
Yeah.
researching what exactly you're looking at because you mentioned few times that you know exactly what property to buy or rent, which is
Yeah.
gonna be income producing for the operator.
Yeah. Okay.
So how do you
So
identify that?
that I will give my shortest and quickest possible answer because I have made a 40-hour long course talking about this before. So it's
Uh-huh.
it's it's quite a bit. But are you familiar with AirDNA, the software?
No,
AirDNA? No? Okay.
no, I know I don't.
Yeah, so there's this software called airdna.co.
DNA, okay.
Yeah. And the software has an algorithm which scrapes Airbnb and VRBO, every single Airbnb listing that exists, and they record the calendar on a monthly basis, or sorry, a daily basis. And this software is essentially being able to figure out exactly how much every single Airbnb is making in the entire world. And it then takes all that data and puts it on their website and in a way that's like consumable. And it's a software that you can use to be able to navigate any city, right? So if you want to go look in Austin, Texas, and go take a look at every Airbnb that exists in Austin, Texas, you can do that, and you can see exactly how much every Airbnb is making, right? Now, with that being said, it's not perfect. There's a lot of, we know when it comes to data, there's good data, there's bad data, there's useless data. And so what I do with this software is I first have to figure out, what market should I look at in the first place, right? And I've got a list of things that I use to vet if a market is worth looking into. Okay. And I can get into those details, but I'm trying to give the quick answer here. So I will use this data within a market to look for trends in the data because what you can find is, let's say you were to look for 4 bedrooms in downtown Scottsdale that were regular homes and they all had pools. Okay. So I've got this sort of like grouping of a certain class. And what I can do is I can take a look at all of the Airbnbs that meet that same requirement, and then I can see exactly how much they're making. And when it comes to Airbnbs, there's a lot of variance on how much a specific property can make based off of the way it's designed, what amenities you have, what you price it at, how good of a host you are, all these different little things. And so what I try to do is figure out on average how much I think that 4 bedroom in downtown Scottsdale with the pool could roughly make. And I can use that number to then underwrite a 4 bedroom for sale to see if there's any money to be made there or not. And at that point, I can then know if it's worth moving forward with on that property. Now, again, trying to say this quickly, so I just want to say one last thing here. What I'm really doing to like feel very, very confident to know if I should buy a property or not is I first figure out if the market has cash flow potential. So Boise, Idaho, as an example, extraordinarily difficult to find a property that's going to cash flow in Boise, Idaho as an STR. Okay, because home prices are up here, travel demand is down here. It's just there's a gap, right? And so it's hard to generate enough revenue to be able to offset your expenses and produce a profit. But other markets, there's ability to do it. You know, Scottsdale is an example of one of those markets where you could do it. And so what I'll do with data is I will look at almost every single good piece of data within a market in different subcategories, like 4 bedrooms, 3 bedrooms, you know, downtown, not downtown, pool, no pool, all these different subcategories. I'll do this and I'll try to figure out of all these different scenarios what that revenue expectation could be if I were to put together the listing myself. So like if I were to do it, what it would look like, how I put together, what would that revenue potentially be? And then you go and reverse it and look at every single home that's for sale within that area, and you try to find the biggest the price to rent ratio that's the highest. So in other words, if I were to buy a home for 500,000 and it could produce 100,000, that's a 20% price to rent ratio, right? That's really good. That tends to be like the baseline. If I can get it higher than that, right? If I can find a $500,000 home that can make $140,000 a year, like that, those are insane numbers. And so I am analyzing this data to figure out what the revenue expectations could be, but also what the revenue drivers are. Does a hot tub matter? Does, you know, having a pink home matter? Do these things drive revenue? And then once I can learn all of these little revenue drivers and know that the property can cash flow, then I just reverse engineer that to go say, okay, I need a 4 bedroom in downtown Scottsdale with a square pool that has a fairly decent yard, that has a living room that can be turned into a game room, and it doesn't need to be too fancy, but I can't buy it for over $600,000. And if I can find that, it'll make $120,000 a year, and there'll be, you know, a 10% cash on cash return from that home. And then I just go and look for that home or wait for that home to become available. Does that make sense? I went through a lot of detail
It
there.
does. No, I think it was a good walkthrough. I really enjoyed that. And then I learned from your experience. Another thing I wanted to ask you from your experience, since you have done so extensive research, even at the amenity levels. So what one amenity that consistently drives booking? The most hosts maybe overlook, they just think, oh, maybe it's kind of extra cost for them.
Yeah. So the answer is it depends. And I'll answer it this way, right? Do you need a hot tub in the Keys of Florida, or do you need a hot tub in Michigan, right?
Mhm.
You want one in Michigan way more than you want one in the hot Keys,
Exactly.
right?
Mhm.
So it always becomes market dependent on the amenities. And I think how do I put this? Like it's market dependent, but then every market has like different things that matter. And if
Mhm.
you can look into that market and try to see what other people have, then you just reverse that and do it for yourself. And so I've been trying to get the word out, but Airbnb is one of the most simple businesses that you could possibly do, right? Like you're about to put on a conference, okay?
Mhm.
And that conference is extraordinarily difficult to do because you have to get your leads for people to come to your from all over the place, right? And you can't just go look at another conference and be like, "Oh, this is how they're getting all their leads." It's like, "No, you can't. You've got to figure it out from the ground up, right?" But Airbnb, every single Airbnb gets all of their leads from Airbnb. Like there's no marketing aspect to it. And then the product that they're offering is the exact same. It's a house where people sleep, right? And every single person has a bedroom, bathroom, living room, dining room, and kitchen. And so if I am in business and I want to beat my competitors, all I have to do is figure out what do my competitors have and how do I add more. And then when you add more, you are then more valuable and you should sell for more. And so when you're trying to figure out like, hey, I know I'm not directly answering the question because it's a question that can't be answered.
And depends, where the Airbnb actually is,
Yes.
and what people like or what people prefer. I know people's preference too, and user experiences like highly, I think needs to be taken into account as well, depending on the location where you are, and accordingly you can decide on the amenities. So,
Correct. Yeah.
but I don't know, when you were talking about amenities, this question pop up, what people are just adding like more bells and whistles to generate better income than the others. So that's the reason I wanted to ask you. Let me rephrase the question. Let me ask you the other way. Since you have carved this niche, interpreting the STR data or the short-term rental data, what's one of the overlooked metric that often tells a real story about a property's potential?
Hmm. Overlooked metric that tells a property's potential. The demographic is probably the one that's the most overlooked.
Mhm.
So, um, somebody may look at an Airbnb listing and go, that's a really good listing, right? And they'll go, they did a really good job of creating a space, and it's got a pickleball court in the backyard, and it's got, a game room, and it's got like a pool and bowling. It's got these amenities, okay? Now, what they may not realize is that the place was very specifically designed to create a resort feeling for kids, not adults. Okay. But they're looking at it and going, I need a pickleball court and I need a game room. Okay. And then they put together the pickleball court, but they use really boring colors. So they use like government colors. You know what I mean? Those like blues
Right.
and greens, like where you would see in like they will use those colors. But they think to themselves, I've checked the box of having a pickleball court. But what they don't realize is the one that they're trying to replicate has very bright and vibrant colors because that's going to be more fun for kids. And when a kid looks at that, they're like, oh my God, like look how exciting this is, right? So they miss the demographic that they should be marketing to. And a really good example, like the easiest example, is a bachelorette trip. Some people have created these all-out pink listings. So the walls are pink, they got neon pink lights, they've got pink paint on the floor, pink everything, right? And so you look at that, that's like, okay, I can easily replicate that. But then some
Mhm.
people will do that, and then they'll add like a jungle gym into the backyard as well. And it's like, well, you're trying to hit two demographics. You're trying to hit families and bachelorette trips. It's like that doesn't make sense, right? Because now the families don't want to go there because they clearly know it's just a girls' party house, and the girls are like, well, why are we getting a jungle gym in our backyard, right? Like, what are we going to do with that? And so that is something I've seen missed and overlooked quite a bit. Make sense?
Wow. Great. So tell me from your experience, I wanted to hear a story, share with me a story. When you use your data, when you're analyzing all this data, trying to figure out which is the best Airbnb location, market, all the amenities, but you might thought it might be a risky deal that might turn into a cash flowing asset for you, a success maybe.
A time when we've been able to find a deal that we thought was going to be a bit of more of a risk, but turned into like a really good scenario.
Success.
Hmm. Okay. So all of the properties have been a success. So take technically across the board, we're
Mhm.
successful. Um, I can think of risks that we've taken that turned out really well. If I could share that, instead of like an individual property, it was more of like an idea of what we did. Would that
Just
be?
overall, what you did, you thought maybe when you're doing your research. Sometimes, the reason I ask you this question is sometimes, we overanalyze things. So a
Hmm.
lot of people, they get into this analysis paralysis mode as well. And
Hmm.
sometimes they get totally stalled. They don't want it to do anything. They feel like, okay, it's like kind of overthinking, overanalyzing kind of thing. And
Hmm.
sometimes you just like get into something, feeling is okay, it was not a good idea to begin with, but eventually it just turned out to be kind of a gold mine for me, okay, yeah, it did work for me, even though I was just like, getting this jitters to begin with.
So there's this one market, and one thing I'll just state right now because I've everyone always asks. There's one market that I don't talk about any of my markets publicly, just because we've helped invest over $100 million into those markets of
Uh-huh.
people's like real money, and
Mhm.
I don't want to make the competition harder for them. Do you know what I mean? So
I
if
know.
that's okay, but there is this one market, and it's one of my like favorite research things I've ever done. So when I first looked into this market, every Airbnb was a really ugly looking Airbnb. Like they were just not good listings. They had bad photos. It was really dark. Um, and there was actually not that much data. Like there was maybe 10 to 15 different Airbnbs that I could use, whereas I was used to looking in other markets where we had like a couple thousand listings that we could use, right? So it go from like that many to like 15, and then you got to use those 15 to think if it's going to be a good decision or not. And so when you do that, you try and check as many boxes as possible on the buy box to give yourself like the best possible chance, right? And that's essentially what we did. Like we looked into this market, had great regulations. It was a smaller market. Nobody was doing anything in there that was interesting, good, whatever it may be. And but it was still close to one of these larger cities, and it was a destination. And we just thought like the home prices are great. Even with these like Airbnbs are not all that beautiful, they're still pulling like a decent amount of revenue. And so we decided that we were going to get a property there. And that one was probably the most nerve-wracking one for me, where it was like, I'm scared. Like I'm genuinely scared because we have a perfect track record. I don't want to miss out on that. And so, anyways, went to that market. I actually think this is like because it was so nerve-wracking.
Mhm.
I went deeper than I normally would, and I actually learned new tactics, such as demographic research. That was the market where I learned demographic research for the first time, and we hyper focused on families, specifically kids, and created a space that was just way better than everybody else's. Um, Really, really well designed, and it did way better than what we thought. And then we ended up getting, I think, like 10 more there, and they all do way better than we thought. And so that was one of those markets where you're just unsure, but it ended up working out really well. And I actually have one other of those stories too, but it's essentially the same idea. There's, I can
Oh,
actually,
okay.
I
You
can
can share
share this,
that.
I
Mhm.
can actually share this market because even if I share it, good luck. It's good luck. Um, so Miami is a market that has scared the living out of me forever because it's a beast of a market. There's so many pieces of data. The data is not that helpful. It's a little wonky in Miami for whatever reason. There's two very large property management companies in Miami that have data that is inaccurate that could really screw you up. And I learned that from a Facebook post that I happened to come across, right? And so Miami as a market is just terrifying. I'm so worried that it's going to be oversaturated. The home prices are going to be a little bit too high. The competition is like through the roof. There's a ton of luxury out there. But I had a client who told me he's like, I want Miami, figure it out. And so I've looked into it multiple times. I looked into it even further again. And again, it's one of these scenarios where we tried every single tactic and strategy to ensure we wouldn't miss. And we found a home that met all of those criteria within the first 3.5 months. He had $65,000 of bookings within that time frame, and $30,000 to $35,000 of that was going to be straight profit, and he hadn't gone into peak season yet. And so it turned out to be like a gigantic success. And again, it's the credit to over analyzing a scenario. So when people talk about like analysis paralysis, I genuinely think like continued analysis is actually what leads to success. Like the more, if you feel analysis paralysis, keep going, keep analyzing, because you'll eventually get more clarity.
Oh, that's a good one. Keep analyzing, and eventually you'll get the. It's like being consistent. You'll get the clarity. You'll get there. So, what is the biggest misconception new investors have or might have about the Airbnb profitability? Because you just threw out very big numbers at me, and I was not thinking about those. Before we started recording. For me, Airbnb was because I know my brother-in-law. He does Airbnb for last multiple years because he has an in-laws unit, two-bedroom, one bath, and he does that. And for me, that's like $5,000, $10,000 income kind of thing for them because they rent maybe once a month or twice a month kind of thing.
Mhm.
So I didn't think about the kind of data that you're sharing at that
Mhm.
level.
Yeah, well, I hate to give out exact numbers because every situation is different. If you have a property
Right.
manager, what your debt service is, all those different things are going to make a difference to how much you could expect. But on average, if you're self-managing, you're getting a good amount of debt, you're leveraging, I guess what I'm trying to say there. We are able to help clients find properties that are profitable from $20,000 to $50,000 on average. Um, so if you bought a property through us, on average, the returns you could expect is somewhere between 20 and $50,000. Again, not everybody, but it depends on your situation, but that tends to be the average.
Interesting. So, what is the biggest misconception people have about Airbnb? That was the question I was trying to get to.
Yep. The biggest misconception is that they believe that every property is could be profitable if they just put it onto Airbnb. Right? Is the My entire business started with the concept of trying to ensure that nobody buys an unprofitable property because so many people just bought a home in a vacation market and went, I'm in a vacation market, so of course it's going to work out. I'll toss it onto Airbnb and it's going to work out. And they didn't properly underwrite. They didn't even know what their competition was doing. They bought a home that never, ever, ever had a chance to ever be profitable ever because they paid way too much for it, and there wasn't enough demand in that market for that home to be able to make a profit. And the misconception is that they just believe because they're putting it on Airbnb, it's going to be profitable. And because it's an Airbnb, it'll cash flow. All these people talk about how Airbnb is cash flow, and it's like that's not the case at all. It's actually very difficult to get a property to cash flow, especially nowadays, because home prices nearly doubled, interest rates nearly doubled. And so now it's really difficult, right? Is it possible? Without a doubt. I'm living proof of it more than anybody else, but it's extremely difficult to do. And you can't just go into a vacation market, buy whatever home that you are approved for, and put some furniture in there and hope for the best. It just doesn't work like that anymore. It's gotten too sophisticated. It's gotten there's a lot of money that people are starting to put into these properties, and Airbnb is evolving as an asset class to be more than what it was before. Before it was here's a bedroom, bathroom, living room, dining room, and kitchen. Enjoy. It's not a hotel. So you get a kitchen and a living room. How nice is that? Now it's like, here's a mini resort in your backyard. Enjoy, right? And people are like, yeah, that's awesome. So,
It's
um,
a higher now. Yeah,
yeah.
I agree on that. But there's a lot more competition too. It's not the same thing Airbnb like when it got started initially, 5, 10 years ago, or even however longer. But it's just like too competitive now. A lot of people are entering in this market, and there's no barrier to entry. Basically, maybe now there's one, but before there wasn't any. And then I think that's the reason it could be, being so competitive market is hard to scale or hard to be that easy, get that success that easily.
If
Is that
if it
true
was
statement?
Yeah, if it was easy to find a good property, my business would not exist, right? There's a reason we exist is because it's difficult to identify which property will actually work well and why and how to make it work well. Should you get a hot tub? Should you not? That's the question you asked. Well, it's different every single market. And so not every single market, you get the idea. But yeah, we only exist because it's tough.
Interesting. So let me ask you this question. Running this data-driven business model that you've created for yourself is very intense, and you're very, very passionate about it. Seems like very confident, very passionate because you know your data, you know your numbers. But I'm assuming it's a lot of work. So how do you stay grounded, especially being a new dad, and then
Mhm.
it's like working, kind of work-life balance there?
Yep. Great question. I think that's something that I've been working on for like 15 years, like trying to figure that out. Because when I'm left unchecked, I'll just keep working, right? I'll just keep going, keep going. Um, I my fiance is very helpful in the sense of creating a work-life balance because she tells me she's like, you're done at 5. You're done at 5. You know what I mean? We're gonna hang out with the family together, and if you want to go back to work after our daughter is asleep, go for it, right? But you're done at 5, and it's not like an option, which actually helps a ton because then I will stop and I will take the family time. And if I need to go back to work, I'll go back to work after she's asleep and I can get the work done. But at least I'm spending time with the family. That's one of the things that has been helpful, just having that person there to be like, stop, right? And like actually spend time. The other one as well is building a team. I,
That's
I can't tell you
important.
how many years. Yeah, I can't tell you how many years, I thought that being an entrepreneur was doing everything yourself and going out there and making it happen and figuring it out. And it is at the beginning when you're just scraping by to figure it out. But if you can build a business that can support a team and you can build a really, really strong team of smart people that really love what they do and create that environment, it makes a world of a difference to what your company can do because it's no longer just you doing stuff, it's 10 other people that are, smarter than you doing these things. And that's really what I've been trying to build as much as I possibly can over the years. And I always think that a business is kind of like a sports team, right? And if you take any professional sport, let's just take, football as an example. In the NFL, every single coach and business and team owner is trying to do everything they can to get like the best possible players on their team so that they can win. And as an owner of a business, there's zero difference. There's zero difference. I want the best possible data analyst. I want the best possible head of acquisitions. I want the best possible operations person to be a part of my team so we can just keep winning. And if I can have a business that does that, it helps with work-life balance because I've got such a strong team uh, to back me up. And so that's my quick little answer on that one.
I hear that all the time. Thanks for sharing that. I heard that multiple times before because everybody says that, I will feel successful or I will be a successful entrepreneur when I have a strong team and I'm totally insignificant for my business. Whether you're there or not, business is kind of running on autopilot because your team is that strong. So then you feel successful. That's where true scalability happens, basically.
Yeah, that idea of not being there
Hmm.
is still a struggle for me. It
Hmm.
definitely is because and I don't I love the journey of being an entrepreneur. I love the journey of building a business. It's always interesting. I'm always learning. I'm at a point right now where I can, walk away and it still does what it does because my team is building it. But as a leader, it just doesn't sit right with me to not be in the trenches with my team. And so there's a disconnect there where I'm not building this to just walk away and let them do it. It's like, no, we're building this together.
Together. Hmm.
Yeah. So,
Make
but who knows? Maybe in 20 years from now, it'll be a little bit different, right? So, but
That's
we'll,
true.
yeah,
People
we'll see when we get there.
do. So, what trends or market shifts that you're seeing in today's state for Airbnb? And then what do you see in your crystal ball? What's going to happen to Airbnb?
Um, um, I think Airbnb is just continuing to evolve. So take like self-storage or multifamily, when people really try to learn and figure it out, they keep optimizing and optimizing and optimizing and optimizing to figure out how to get better returns and get better deals and get better at it, right? Airbnb is no different. And it goes for any business. Take the iPhone. They've kind of ran out how to make it better because it's so good. And I feel like Airbnbs are kind of getting to that point where people buy an Airbnb, make the entire inside so beautifully well done. Every little nook and cranny is put together really, really well. And it almost feels like you have this experience when you're inside. And then you go into the backyard and it's a little mini resort. And there's no room for improvement. It's just like it's perfectly put together. And the more that those keep showing up, the more that as a guest, you get a better experience, you get more for your money, and it's just an overall better asset in comparison to something that doesn't have all of that. And so I think Airbnb just keeps individual homes, individual Airbnbs keep getting better and better and better and better because it's a competitive market. And I think that's going to be great for the host because they'll make more money. And I also think it'll be great for the guests because they'll get more for their money.
Great. Thank you so much for sharing that. I really enjoyed our conversation so far. I think we are over time. We've been talking so long because I wanted to learn a lot more from you. So at this point, I'm going to ask you, share one more golden nugget with my audience. It could be on anything, could be on mind shift too, because you need to have you need to have that mind shift if you wanted to create something like this in Airbnb, like you had, right? Moving from arbitrage to just buying your own properties or just shifting to a brand new model. So anything that you like to share with our audience.
The I'm going to be biased when I say this, but I genuinely believe it's true. The most important skill that you can learn when it comes to Airbnb is understanding the data. Because if you can understand it, you can make a good purchase. And if you can
Mhm.
make a good purchase, it'll allow you to continue to scale. And if you screw up on that piece, it's really hard to fix in comparison to screwing up as a host. So, as an example, if you're a host and you just give the guest a terrible experience, they'll tell you everything you did wrong. And by the time the next person shows up, you can fix all of those things. If you make a bad purchase and you buy the wrong home in the wrong area for the wrong purchase price, it's going to take you about 2 years before you realize you screwed up. Because in year
Mhm.
one, you're going to think, okay, it's year one, I'm just learning, and let me try and make the listing better. And then in year two, you've done everything you possibly can, and you're still not making money, and you're going to have to sell the property because you're making $0. So if you can figure out the data, you can stop that scenario from happening. And if you're in a situation where you're raising money, if you, if you buy if you raise money and buy a property that does not turn out to be profitable, good luck raising money again, right? And if you do that multiple times, really good luck doing that again. Whereas if you find a property and it turns out to be profitable, people will give you more money. You do syndications, you know exactly what I'm talking about, right?
That's true.
It's all about the track record. It's all about how well you can do. So data is so important in the Airbnb industry. It's not even funny.
So it's truth for it's applicable to any asset class or any field, basically, Data is just all the historical information. It's all the business intelligence, how you're using that data to create something better for yourself, right? So
Yeah.
this is all business intelligence that you're talking about. And thanks again for sharing that. This brings us to our rapid fire round. I'm going to ask you 5 questions. You can answer it in one word or one sentence only. Are you ready for
Okay.
that?
Ready.
All right, the first question is, what is one of the most important thing you have learned in your life, and how did your life change after learning it?
Gratitude.
That's the best.
Um, Yeah, if you, I realize that if you are grateful for the smallest things, everything is okay.
That's true. I agree with you 100%. Share one good book that you would like to recommend to my audience.
Atlas Shrugged by Ayn Rand is my favorite book.
I heard about that. I never got a chance to read. I heard this multiple times before. In one word, what does life mean to you?
Uh, Live, like, like, do you know what I mean?
Live.
I
Yeah,
can only
I
use
like
one
that.
word. I can only
No,
use
it's
one
good.
word. So
Yeah, it is one word live. And then most of the time, this chaos called life, people forget to live because they're always chasing. They're not living, they're just sleepwalking. So that's a good answer. Thank you. What is your biggest passion?
Airbnb data.
Ah, yeah, that's good. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
Learn to raise money to buy properties.
That's a good one. So how can people reach out to you?
strsearch.com. That is the name of my company. There's 20 different ways that you can reach out to me from going to the website. But I always like to mention that I don't want to leave everybody hanging, right? There is a free 7-day challenge video course on my website about Airbnb data. After I had found 120 properties, I sat down and created a step-by-step guide on how I did that with Airbnb data and then put it on my website 100% free. You don't even have to plug in your email to get it. So it's just free on the website. And then I recommend starting there. And then if you want to go further, there's other ways to be able to reach out to me directly.
Thanks, John. I really enjoyed our conversation today. Thanks for giving us your insights on Airbnb.
Thanks for having me.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.